Welcome, everyone. Thanks for joining us at this latest At the Coalface session. Thank you for giving up your time. I know time is precious and there are a lot of these kind of webinars out there. So really appreciate you all making time to join us today. So what these sessions are really about being at the front line of dealing with fraud risks or fraud disputes and investigations. We've had a couple of episodes so far. We've had an episode around procurement and supply chain fraud with Tony Sales from We Fight Fraud, talking about how the criminals infiltrate supply chains. And we've also had Dr. Elizabeth Carter, who's here talking about using the power of language to disrupt fraud. And we've got both of those sessions have been recorded. And I think my colleague Paul will put those in the chat for you shortly. Now, for those of you who don't know me, my name's Aaron Chauhan. I'm the director of the law firm Tenet. We deal with advice around fraud prevention, financial crime compliance, disputes and investigations arising out of fraud. And I'm lucky enough to get to do these sessions and get to meet some really nice people who know a lot. And today's session all about keeping pace with fraud risks and balancing compliance with tech, and with a particular focus on financial services for today. So I'm really grateful to have Steve Goddard join us from Featurespace. Steve, thanks for coming along. I just wonder if you could say a few words about yourself.
Yeah, sure. So I am a fraud subject matter expert from Featurespace, like you said. So Featurespace provides fraud and financial crime solutions to banks, PSPs, sort of globally, to help them fight fraud, fight crime for their customers. I've worked in fraud for coming up to 20 years. I started my career in banking. Looking at check fraud, so I was, getting the physical copy of the check, running it under a black light, doing handwriting analysis, all that kind of sort of fun stuff. Just being on the front line. So I continued online travel agency, and then working with sort of e-com merchants, helping them to run their strategies, all the way through to kind of vendor life. Product management as well, developing products globally for customers, and then being effectively sort of the voice of the customer within a company such as Featurespace. Me and my team, we've done the job of the people that we're kind of dealing with day to day, so we know their pain points, their problems, so we can help them kind of solve those.
That's brilliant. I think that's a key thing, isn't it? It's knowing what stakeholders in business or those individuals in businesses dealing with these issues are struggling with, and be able to come up with some kind of tech and some ideas about how to support them. So for those of you who haven't attended these sessions before, the structure is relatively simple. We haven't gone through this before, we haven't rehearsed, we've got a kind of idea of what we're going to talk about. We pick on about 4 or 5 themes and we talk through those. We might go off tangent, we might go off script a bit in terms of those areas, but we'll come back, and after about 45 minutes, we'll finish up. If you've got any questions during the session, if you could pop them in the chat, I'll run through some of those questions at the end, and then we'll round up and send you on your way within the hour. After the session, within about a week, you'll get like an electronic flipbook, kind of a summary of the key points we've learned from the session to take away, like in the old days where you put something in your drawer and think, I might need something from there, or you'll have it in a digital format instead, and we'll get that out to you. So, look, I'm glad we didn't do this session last week, Steve. The kids are back at school. And it feels like it's my first week of normality. I'm like, everything seems a bit more structured. So I feel like I'm on top of it for this. But look, let's dive straight in. What I wanted to start with is the ease for fraudsters, scammers, as they often refer to now, to commit fraud right now. I mean, we've got that competition and speed about onboarding. We've got consumers using multiple banks, so it's harder to kind of look at their behavior patterns. But one thing that intrigues me is that you've got a lot of innovative banking, financial services products and organizations out there. But I saw a survey that said 80% of firms are undertaking their risk assessments around fraud and financial crime risks on an Excel or a Word document. And only about 15% are using a tech-based tool. Given how much tech we've got out there, what does that say to you that so many are still going back to the kind of Excel and Word to do their risk assessments?
I guess it's people inherently don't like change. They've been doing things a certain way and it works, and to try and change it to do something new is always a big change, especially in big companies like banks. It takes a lot to to get anything new in, to kind of change people's minds. It's, we know from a sales cycle perspective, selling to a bank, it's not like selling to, someone like a merchant. That could take a couple of months. Selling to a bank takes a long time. You have to change a lot of people's minds. You have to, it's a big thing to kind of disrupt and put a new solution in there. So there is that kind of, I guess there's that fear of change. What happens if we do it and it doesn't work? And then there's trust. Trust. We always have to have trust for these things. We saw that with things like the adoption of machine learning. Moving away from rules. Everyone likes rules. It's easy to read. You can understand it. You know exactly what it's going to do. Machine learning was seen as a black box. So it took a long time to kind of build up that trust in these new solutions and new ways of doing things. So it takes time, and you need empirical evidence as well. And the industry is quite small. People talk, people move around, people say, this solution's really good actually, or this company have done it this way, and actually they've seen real improvements. So it's a lot slower than it could be for in different industries.
And do you think that kind of slow adoption of changing tech solutions is reflected in terms of how they build controls as well? Because lots of firms producing lots of new products and service lines, and that's increasing potential fraud risk because there's more opportunities, there's more lanes to drive in for the fraudster. Wonder whether the controls are being put at the forefront of everything now, and whether that kind of slow adoption of tech to embed controls at an earlier, quicker pace is something that's not happening. And is that how you see it? Is it controls just not being embedded using tech as quick as they could have done?
Yeah, I don't think they're as much of a priority as they should be and they could be. There's that speed to business. People want to deliver a solution. People want to ingest things a lot quicker. People want access to something a lot quicker. So there is that push to kind of get something across the line as quickly as possible to reduce the friction. As consumers, we want something as quickly as we can. We've got next day delivery on Amazon Prime. We've got streaming services. Everything we need it quickly, and that's the priority. Is how can we deliver something to a customer, to an end consumer as quickly as possible, and have the quickest frictionless experience for them as possible. Whereas we're making it easier for genuine customers, but we're also making it easier for fraudsters, for criminals to take advantage of that, because like you said, there aren't those controls built in at a ground level. Often they're looked at later down the line. Right, let's get something out there. It's being abused. How can we fix the abuse? Actually, what we should be doing is, right, we're going to deliver this. How can it be exploited? What are the things that in there inherently that we can put defenses in place, so it isn't exploited, or it isn't exploited as quickly? I don't think there's ever going to be anything now that's going to be 100% foolproof. No, I think it will.
Yeah.
These criminals will always find a way, no matter what you put in place. Technology advances. You've got quantum computing now. Encryption is going to be turned on its head, because you've got these quantum machines which can tear apart your encryptions in seconds instead of years. So it's going to change. It needs to be dynamic. You need to build in these processes for. You can't just say, right, I've done it here. That's it. It's not going to be right for the next 5-10 years. It needs to be changed, and needs to be dynamic and evolve over time.
It's interesting, isn't it? Because I think completely away from financial crime and fraud, I saw an article that songs are getting shorter. It's because the current generation of new music listeners haven't got the same attention span to listen to a song which is 7 minutes, 5 minutes. They're now 2 or 3 minutes. And so if you go on YouTube, you get a lot of YouTube shorts now, don't you? Because people have got a shorter attention span. So when you take that kind of human behavior point into the frictionless environment, my head's saying, well, there's got to be some non-negotiables on controls which probably need to be in place. So if you're a younger PSP, a younger firm, and you're developing your controls, what are your thoughts around, what are the non-negotiables? What do you have to have? So let's say onboarding or generally on transaction monitoring. What type of controls would you say, well, look, don't compromise on these, no matter how quick you want to develop your product to or get your products out to your customer?
I mean, security is the number one. Is that how can things, can you have JavaScript injections, things like that, things that can malware and all manner of things that make it needs to be sort of brought up to speed with the kind of the digital world that we live in now. You're saying about how we consume information, like TikTok and Instagram Reels and Twitter or X, and it's short and easily to sort of digest. And if you're applying for a bank account or a loan or whatever, and you get these reams and reams of questions, and people just aren't going to kind of interact with it. They want it to be a lot quicker. So other countries have sort of invested in digital identities. There is this it could be physical, it could be held on your device or wherever. This is all of my information. Governments have these things in banks, and a lot of these companies have a lot of information about us anyway. How can we use that and make that secure? So I have that comfort to know that my data is being used in the right way for the right reasons. I don't want to have to keep using the same information, having to keep typing it all in and go and find out where my national insurance number is and all of that kind of information. I want to interact quickly and easily with it, but I also want to do it safely and securely. How can I do that? Is a password enough? Is it two-factor authentication? Is it multiple factor authentication? Is it biometrics? All of those things, there are ways to kind of secure that process and put the right checks and balances in place to give comfort to me as an individual to know that actually I'm not just filling all this out and I don't know where it's going or what it's being used for. I know that there's the right amount of friction, the balance between good friction, bad friction. I need enough friction to know that there are checks and balances. There are analytics in place to monitor it and look for me and understand who I am and why I'm doing it. But also, I want a smooth process that I don't go, I'm bored of this now. I'm gonna go somewhere else. If I go somewhere else and it's a lot quicker and a lot easier. We saw this with sort of buy now, pay later during COVID. There was a big boom for buy now, pay later. And the idea of sort of around the soft credit check, have you got an email address? Yes. Have you got a phone number? Yes. Right, here's some credit. Yeah, that's smooth, and I can buy my trainers from an e-commerce website a lot quicker. But actually, so could a criminal go in there and they found my email address, they found my phone number from Facebook or whatever, some online profile that I created when I was 15 or whatever. They can take that information and they can apply for credit in your name because there isn't the right checks and balances in place. It's all about balance. It's making a good experience for the customer, but also making it a secure experience for the customer as well.
So for me, it sounds like if you're having non-negotiables, you've obviously got everything around as certain as you can be about identity, but I think it's about intended use of the account and intended use of the accounts, and then making sure that you're keeping a good, I suppose, check an eye on, are these in line with what was the intended use, and actually is that intended use really likely, or what they represent they're going to use an account for, is that actually possible?
And it's about ongoing monitoring as well. You can't just do it at the beginning. You need to monitor throughout the whole thing, because you have dormant accounts. I created this account. I maintain. I buy something every now and then. I always pay my money back in time, and I only spend £20-30 for 6 months, a year, whatever. And then all of a sudden I bust out. I go crazy. We need to you need to monitor for that kind of activity as well, not just right at the beginning. They look like this, right? What do they look like 6 months, 10 months down the line?
So if we look at it, exactly that. So when you're looking at it from the customer's point of view, and the customer is then caught up in a fraud, so they say roughly 80% of customers, when they start to make a transaction that's likely to be fraudulent, they're already 80% through on their journey in terms of decision making. They're going to make that transaction. And that may have started from social media or another platform, and they are where they are. They've been groomed in the sense of ready to make that transaction. If they're that far along, I was trying to think, well, how do you disrupt them when they're that far? They're so convinced in their own mind, this is genuine. Whatever messaging and effective warnings are put up is not good. So I'm thinking for financial services, how can they, in fact, wider, how can people disrupt at that stage? And I saw something from MasterCard that I think they have visibility over about 95% of all payments. And they've got a piece of AI software now, which will, I think banks can buy, and it will give them a risk score about what's the chances of this going to be a fraudulent transaction. And it's also good for the recipient bank as well, because they can see where's the money being dispersed around a network, and they can feed that into the risk score. Are you seeing AI solutions coming about now which are going to help disrupt and stop these transactions just when they're about to happen? Or what's your kind of take on that world?
Yeah, I mean, AI is a bit of a buzzword. We could get into an argument about, is it really AI or is it just advanced machine learning? What is advanced machine learning? Is it just a series of rules? Yeah, there's a wider conversation around there. We're seeing a lot more competitors coming up with new ways and new terminology to kind of describe what they do. And yeah, it's, like you said, there's different avenues, and there should be different avenues. If you're trying to if somebody's being socially engineered to make a payment, there are different things that should be done. There are different responsibilities that each company, each whether it's the social media companies, whether it's the telcos, whether it's the banks, whoever, everyone has a responsibility to take an action to try and disrupt that. From what I always see is, companies like Featurespace, so we're kind of the backstop. Ideally it doesn't get to us, but if it does, we provide that level of kind of insurance. This has all happened, and it's very difficult to kind of identify scams, because especially things like romance scams as well, because it becomes normalized. If I'm sending money every now and then, small amounts, it doesn't become suspicious, so that becomes normal behavior for me. That's how I transact. And then all of a sudden there's larger and larger payments, but because I've built up that good history, which seems genuine, it's harder to identify, when it or all of a sudden I'm sending £10,000, £5,000, no matter, however much it is, because of that history that I've built up beforehand. So yeah, I mean, we have sort of great relationships with our customers and really great results in regards to kind of how we identify scams, and we've got numerous case studies with some of so our big customers. We have specialized products just focusing on scams because of all the results that we have, and the great findings are now machine learning contingent, and we sort of came out of Cambridge University, so we're always employing the latest and greatest kind of thoughts and ideas of how we can approach this. Again, it's about being dynamic, it's about changing. Just because we did it 2 years ago doesn't mean that's going to work now. The fraudsters adapt very, very quickly. We need to adapt just as quickly. And I guess with the AI stuff, it just means it scales in the same way that the criminals are using it to scale their enterprises. We need to use it to scale our decision making. We need to make, again, going back to what we were saying around that kind of that speed of interaction, we need to do that as well, because there's more and more transactions. That's not going to stop. That's only going to ever increase. There's going to be more people paying for stuff, more people sending money. That's just how it's going to work. That's not just going to stop or slow down. That's only ever going to increase. So we need to make these decisions. We need to make better decisions, and we need to make them faster, because of the speed of sending a payment, and putting those blocks in place to say, actually, we believe this to be suspicious, we believe this to be a scam. Let's take action. Let's break that spell, and give everyone more time to kind of digest and understand that, and convince, but kind of have that conversation with the consumer and sort of say, look, we believe that this is you're not dealing with who you think you're dealing with. And again, but a while, it used to be, the bank would put up a message just saying, do you know the person you're sending your money to? You know, if you're on a romance or you know, pig butchering, despite I hate that name, or investment scam, yeah, you feel you do know them. You haven't physically met them, but you do know them. That's how we form relationships now. You know, a lot of relationships are built online. So I've never met them, but I do know them. So yeah, I'm going to say yes, I know this person. So that doesn't work anymore. So we have to adapt and have to change.
Do a little dance, give a lights. One of the things you just said though is like building in more time, and one of the things I've seen, and I find it difficult for if it's people in-house and in-house legal or in-house compliance, or the complaints teams. It's just trying to keep pace with the amount of change and amount of documents and guidance out there at the moment. And we talked about having time to maybe look at a transaction. So yesterday, just looking at some notes. So the FCA yesterday put out some consultation on the suspension of payments transactions where where a firm might suspect dishonesty. And the FCA are doing that because when the rules change on the 7th of October, they want to start to monitor how often firms suspend transactions for this 72 hours, how often that leads to identifying fraud correctly, how much value is stopped, how much stuff goes through which is still fraudulent, and collecting all that data. And so when you drill down into that, I started to look into it, and it was saying, well, this will help us make changes to a document called the Payment Services and Electronic Money Our Approach document. That document is 290 pages. And then I looked at another document, which is about disputes versus civil disputes and APP scams. That's another 12 pages. And that's from the PSR, and then you've got all the PSR guidance and the statutory instruments. It just starts to feel quite overwhelming. And GBG, who the software provider, I suppose, they've done a survey of 1,200 fin crime professionals in risk, compliance, complaints. And those professionals are saying, look, most of them are worried about the industrialization of fraud and how sophisticated fraud is, but 75% are saying they're really struggling with burnout. There's just too much. It's just too much already. So apart from me ranting about that, I guess I'm coming to how can tech help with those challenges now? Because I think there's a lot of individuals suffering. I speak to people, I just know they are struggling to just cope with volume, the amount of updates, the amount of change, the speed of change required. And I'm not sure the boards get how much pressure is on at ground level. And it feels like it's crying out for tech now to help. Have you got any thoughts about my rant?
It's a safe space. If you want to share, that's
yeah,
fine,
I'd like to share. It's I feel like I can trust you.
Yeah, I mean, it's something I've experienced myself. I remember sort of working for a e-com fraud prevention provider. Peak period. I was doing sort of 12-hour days. Doing thousands of alerts, and it just like you said, it just gets too much. You can't make consistent, accurate decisions for that amount of time. The human brain just does not work that way.
Yeah,
the way you look for patterns and things like that, it's just you get towards the end of the day, you're looking at your queue and you think, you just want to clear it as quickly as possible, but you're also desperately trying to make the right decision, because there's a person at the end of it. It's not just data, there's human beings. If I cancel this incorrectly, is it going to ruin someone's Christmas? If I stop this payment, does that mean these people aren't going to buy their house and the whole chain falls through and people are left, crying? Or if I don't stop this, is somebody going to transfer away their life savings? That's a huge responsibility to put on someone, and to deal with that and kind of go home at the end of the day to go, have I made the right decisions?
Sorry to get across it, but do you think don't want to get too political, but do you think senior management in firms and other sectors as well have lost sight of that point there, which is actually it's on me to make a decision that can actually massively impact on someone's life if you're on that front line?
I don't think so. I think there's so many sort of moving responsibilities, having to keep the customer happy. You see a lot in the press. Oh no, this bank have cancelled my payment because they thought it was fraud. It's done this, it's done that, it's had this effect. You hear about the bad news. You don't hear about the good news. You don't hear about the thousands and transactions which have been correctly stopped for fraud. You're always going to hear about the negatives.
Yeah.
So it keeps coming back to balance. You know, you need to keep your customers happy. You need to keep your genuine customers happy. I mean, this, you know, the regulation to be able to hold a transaction for 72 hours. I've had discussions with people saying, no, this is the wrong approach. We need to put the right, you know, protection in place so they don't need to do this. But the way I see it, it's a tool. No bank is going to do it for every single transaction. They would annoy all of their customers. The customers would go, I don't want to bank with these people because every time I try and send money, instead of going in you know, the same day, it takes 3 days. They're going to use it sparingly. They're going to use it when they need to use it. Yes, there will be reports in the press about, you know, they've pended this transaction. That, you know, it's always going to happen. Again, you're never going to get 100% right 100% of the time, but it's a tool. And providing banks and institutions like that with as many tools and as many different ways that they can help as possible, I think is a good thing. You know, it's a step in the right direction. The same with PSR as well. You know, there was a lot of, you know, pushback. Is this the right thing to do? People globally are looking at it to see whether it's going to make any difference, and yeah, it's going to make a difference one way or the other. You know, one of the things, you know, we could be seeing is number of reported frauds increasing because people have that. You know, Dr. Elizabeth Carter talks about this as well. The kind of the shame associated with being scammed. And if you know that your bank's not going to give you money back, or the police aren't going to take it seriously, then you're not going to report it. Whereas if you know you're guaranteed to get your money back, that should help with that shame. Again, you shouldn't feel ashamed. You know, we need to kind of change the kind of language on that. It's not about, you shouldn't be ashamed of it. It happens. Everyone's susceptible at any point in their life. But you know, the number of scams reported will increase because people are going to get their money back, and that's a good thing. I mean, from an outside perspective, you look at it and go, scam numbers have increased, the PSR regulations haven't worked. It's like, well, no, they have, because we want more and more people to get the money back. We need to understand what the problem is. At the moment, we know what we know. We don't know what we don't know. We don't know how big it actually is. We have an idea. You know, we have conversations with people, and you kind of get a feeling that it is bigger than what we know. But we're only running the numbers of based on what is reported. So we need to understand the full problem before we can solve it.
Yeah, and I'll touch on some F's. There was some false data that came out a few days ago, I think 3rd of September, just talking about the number of complaints. I'll touch on that in a bit. But this idea of trying to make sure that we can keep on top of the controls and keep on top of everything that's expected of us, and you know, maybe using this period of time that there is a suspension of time before the transaction is permitted. Another part of that for me is that we do a bit of work for a few EMIs, and they have their distributors, their agents, and making sure that they apply the controls in this consistent way. And I think what I'm getting from this when we're talking is about, we just need some consistency across all firms, where we're all going to apply the same level of or the same approach to stopping a similar type of transaction. I'm just wondering whether this type of grabbing of data from the FCA is actually going to help on that. Actually, we're going to see more data about when firms suspend transactions. And I've kind of gone off piece here, but we'll stick with it. Does that data help build the tech solution as well? Then you say, right, we consistently see this is a good time to suspend a transaction, or why? We can build monitoring around that type of approach.
Yeah, I mean, the better data, the better decisions. You know, it's the same old adage with, you know, machine learning. You know, you put crap data and you get crap results out. You know, the better the data you put in, and the more data as well, the more detailed. You know, with the scams, you don't just say it's scams. What kind of scam it is? You know, they're all perpetrated over slightly different lengths of time. And like you said, if we understand that in certain scenarios, then actually pending the transaction for 72 hours results in a better decision. You know, let's start to segment them. Let's start to understand why. Why is that the case? You know, what are we doing differently there? Let's take all this data we have available, and again, share it. You know, we're talking about collaboration, and you know, we're all fighting the same fight. You know, whether it's bank A sending money to bank B, you know, what else can we do there? Let's have some kind of consortium approach to kind of, and again, we've done that from a feature space perspective as well with people like Pay UK to show that actually if you have that consortium view, you kind of the level of insight you get is so much greater, and sharing that information amongst different entities and different banks, again, what the PSR, you know, is doing is splitting the liability. You know, the amount may change, the maximum amount may change, but again, it's taking that collaborative view. It's like, it's not just the responsibility of one party; it's responsibility of everybody involved. And you know, people are always saying, you know, but social media companies need to pay their bit as well. It's like, yeah, they do, but that's kind of outside of the control. You know, this is, you know, we're talking about the financial industry. This is what we can do, and this is what we're going to do. And I think it's a step forward, and that's a good thing. You know, it's gonna promote, because again, banks don't want to be paying this money out, so they're going to have better controls in place and better protections, so it doesn't get to that point. And going back to my earlier point about being that backstop, and solutions such as we've got a feature space to have that kind of last line of defense. You know, it's, you've got your, you know, you're breaking the spell, you've got this, you've got everything else in place, you know, but if it gets to the point where somebody's going to send their money, you've got that last line of defense, that kind of insurance policy to say, actually, based on all the information that we've seen, based on this kind of consortium, based on this, you know, all of the history we've seen of this customer, or this type of customer, you know, whatever, you know, peer group analysis, all that kind of stuff, we believe this to be suspicious, or we believe this to be a scam. We don't think you should make the payment.
Yeah, no, that makes sense. That makes sense. And so I'm just going to check. I think someone put their hand up. I think Richard's put his hand up. But Richard, we're going to do questions at the end of the session so we can get the flow through on what we want to cover. So if you're able to put the question in the chat, that'd be great, or I'll come to you after. Thanks. Just wanted to acknowledge I spotted your hand go up. Frammel's a word, right? You've told me about the word Frammel. Go on, take me through it.
So it's a contentious word in the industry. Some people really hate it. Some people it makes them really angry.
How angry?
Well, they rant more than you.
Wow.
The amount of sort of LinkedIn posts I've seen, people saying, I hate the word Frammel, you know, for whatever reason. But
do you say what Frammel is?
So it's kind of the combination of fraud and AML. It's you know, fraud and AML, historically they're very siloed within sort of banks and institutions such as that. They have their fraud team, their AML team, different kind of, you know, cost centers, you know, different parts of the business.
And do you think there needs to be a separate fraud team? So let's look at it from a kind of perspective of smaller firms, smaller PSPs. Do you think there needs to be a separate fraud team, a separate AML team?
I don't necessarily think so. I think it inherently comes down to what works for you as a business. Just because this is the way it's always been done doesn't mean that that's the way it should be done. If there's a better way of doing it, you know, you're looking at a lot of the same sort of data. You're looking at a lot of the same things, and scams especially has kind of brought the two together, fraud and AML. You know, scams are seen as fraud, but then the money mules part of the scam is the AML. So you're looking at the same thing from two slightly different angles. So perhaps merging those teams. I'm not saying you have one solution which does both things. You have a Frammel solution. You know, it's not half a fraud and half an AML solution kind of just mashed together. It's two separate solutions, but it's under the umbrella of Frammel. You know, you're sharing intel, you're sharing, you know, intelligence and information with both teams. You know, smaller PSPs, you know, they don't have the numbers, so their fraud guy is also their customer service, is also their AML. So they need that kind of, you know, they don't want to be logging into 3 different systems. If they could log into sort of 2 different, you know, one different thing, 2 different things in one system, whatever, the fewer amount of kind of applications as possible, then that's better for them. It's more efficient, it's more economical for them to do. So if it works for you, it works for you. That's the approach to take. If it doesn't, it doesn't. Again, you need to know, you know, your company, your customers better than anybody. So if a Frammel approach is the best approach for you, then that's the best way to go. Make sure you're going to do your RFPs, you're going to speak to your analysts and understand exactly what you need to do, and speak to people like you again. From a these are the kind of regulations that I need to abide by. Does this solution meet those requirements? If it doesn't, then you go for something else. If it does, then that's a good avenue to go down. It's knowing who you are, knowing what you want to do, and finding the best solution for that.
Yeah, I definitely think though, certainly smaller firms, and having someone with the skill set to sit in both a fraud and an AML team, and essentially could be the same person, I think you're going to get a better oversight of typology. You're going to get a better oversight of understanding and quickly identifying risk. And if we go back to transaction suspensions, picking the right ones out once you see the data. One of the things that I've seen is about a challenge in terms of be it from fraud AML teams, and is looking at transaction data, and have insight from be it from your fraud understanding or your AML understanding about what a customer behavior is like. So now where you see this kind of proliferation of customers using multiple bank accounts, so you don't get used to understanding their behaviors. And whilst you asked me to talk about this, and you definitely haven't asked Featurespace and asked me to speak about it, Featurespace have something called, I think I've put down as adaptive behavioral learning. And to me, that seems quite intuitive about, right, okay, how do we pick out those alerts where this is definitely out of kilter? And you talked about the romance kind of scam example. So what is the adaptive behavioral learning product tool? What is that about?
So it's adaptive behavioral analytics. So it's the kind of it's where we came from. So sort of 2008. Prior to that, we were founded in 2008. But before that, there was a guy called Professor Bill Fitzgerald and one of his students, David Excel. So they came up with the idea of adaptive behavioral analytics, and inherently it's understanding good behavior over bad behavior. Thankfully, there's a lot more good behavior than there is bad behavior. How I transact, how you transact, that's normal. That's good. Instead of focusing on what's bad and just training your models and say, right, this is what fraud looks like, you're missing everything. So it's a mixture of kind of supervised and unsupervised machine learning to profile against who you are as a person. So when that changes, it flags. What is normal for you? How do you, how often do you buy your coffee from Starbucks, and you go online and Amazon at 3 a.m. to buy this or whatever. That becomes you. That becomes you as a kind of an entity. We can profile against different entities, but we sort of, from a simplified perspective, we take an individual as an entity. So me, you, whoever, and we understand who you are. So if things start to happen, if your card is compromised, if you're being socially engineered, things are abnormal. This isn't how he normally does things, or this isn't how when he usually makes payments, or this isn't the normal amount. It's about kind of, again, like I said, just understanding who it is and being able to see where things fall outside of that normal behavior and start to focus in on that and look to see, okay, we've seen this from slightly different peer group or over here, and historically that's happened. So maybe we should focus on this a little bit more, or we flagged that. And that's kind of effectively what it is. But it's that advanced machine learning which adapts, and it adapts over time as well. So those kind of the feedback loop I was mentioning, your and those signals and the labels that you apply to say, right, this is a romance scam, this is an investment scam. You feed that in and it understands what that is, and then it applies it to kind of future scenarios as well.
Yeah, it's really interesting because we've just started some analysis of the Financial Ombudsman Service has made findings on, and you look at all these APP cases and where they've made positive decisions to refund the complainant customer. And of all the APP cases, for example, we know most of them look like investment fraud cases. And if you can understand, okay, that's where the criminals are targeting the most, and then you apply the adaptive learning behavior, the analytics, you're going to pick up those types of things. I guess, this kind of nicely flows into the world where we're trying to all learn to adapt to, which is APP. And there's a lot of stuff happening with APP. I think we're all probably expecting that this consultation will lead to the value coming down to 85,000. We know CHAPS is now looking like it's going to be introduced as well. So you've got the FCA consulting about the suspension transactions, and I think you've already said it. I was going to talk about some financial ombudsman service data, but I'll do that in a moment. But you've already said it. Well, again, kind of not quite getting political about it, but this seismic change of all PSBs essentially being under this now umbrella to refund. Do you think that was essentially what was needed to drive up better controls and monitoring to stop these transactions? Because ultimately, what we want to do is stop fraudulent transactions going through. But it feels like they've had to do this with legislation to make that happen. What's your take on that?
Yeah, I think something needed to happen. We could have danced around this for years, finding out the best solution. Meanwhile, people are continuing to lose money. People will always be scammed. We're not going to stop scams. It's about making it harder for the perpetrators of that. I was saying earlier, I started my career working in a bank, coming up to 20 years ago. We had scams then. I remember phone calls. I remember dealing with, a new university student who believed she won the Spanish lottery. Dealing with a guy who was having an online relationship with somebody in Africa. This is what we're seeing now. It was far more sporadic, but these things are always they can be around forever. The idea of scamming has been around for thousands of years. But it's a lot more prevalent now. It's huge. It's called like a national security sort of crisis. Something needed to happen, and there's been a lot of contention about PSR and what they're doing, and this is the wrong approach. But actually, it's an approach, and it's made changes. It's made people sit up and go, right, we need to do something. I don't want to be liable to pay half the money for incoming and outgoing transactions. It's not solely responsible for whoever's sending the money. It's the receiver as well. So again, it makes everybody. It brings more people into kind of that kind of conversation, that kind of liability. That shift, which is good. I think is going to, there are going to be negative impacts because it's going to, the issue around reducing it to 85,000 was because a lot of the smaller PSPs having to pay out 400,000 would cripple them financially. On the flip side of that, now we've reduced it to 85, but if the financial ombudsman still agrees that it should be 400,000, then they're liable for more because they can't split that 400,000 with the receiving bank. So it's there's similar to what I was saying. It can't. We're not just going to put this in place and then just leave it. It needs to change. We need to have a review of those numbers. We need to understand what's happening. With is the right amount, whether that amount needs to change, whether the amount of time it takes a refund, whether that needs to increase. We can't just draw a line in the sand and say, right, we put something in place, that's it, that's going to solve it. It's not. It needs to adapt over time. It needs to change. We need to monitor it. We need to see whether it's working, where it's not working, because that's where the rest of the world are looking at it. Places like Australia and US and Singapore, they're looking at this and going to go, are they doing the right thing? I don't know whether it's the right thing or not. A lot of people won't know. But it is a thing, and it's moving forward, and it's moving, and it's making a lot of people make changes, increase their fraud detection strategy, making it better, making it whatever changes they can put in place, whatever things they can do to increase or reduce their liability, which means the end consumer, they're going to get their money back, but actually hopefully it won't get to that point where they lose money. That's where we want to get to. We want to get to the point where people aren't losing money in the first place, so they don't have to be refunded.
Yeah, there's so much that flows out for me. There's everything from concern about customer behaviour, seeing this as an insurance product, and they say, well, they'll be less mindful of those effective warnings, effective or not. All the issues I know firms are going to come out with about if they suspend a transaction, right, during that period, what are they going to look at for assessment? There's guidance, as I've said, about, when you're going to say it's a civil dispute or an APP scam, and if it's a civil dispute, you don't have to think about the new rules. There's issues about submitting SARs and DAMLs in that suspension period where you're thinking, well, is this going to be the proceeds of crime? Or if you're acting for the recipient? There's lots of stuff. And I mentioned this false data. And the worry I've got is whilst I think it's absolutely vital that there's this protection for consumers, I don't want consumers to stop paying attention, and I want maybe that's the message that firms need to be sending out. This isn't an insurance product. There's still this consumer standard of caution. We'll put an article in the chat. We did something about analysis of gross negligence cases at FOS, and most of them are upheld. So that consumer standard of caution is a very high bar. What I did see those things. So 3rd of September, the FOS announced their latest complaints data for Q2. So that's April to June. They said there was about 8,700 complaints on fraud and scams. Half of those were APP. But the number of complaints and fraud and scams has gone up by 2,700 compared to the first quarter in Q1. So it means either more people are complaining, or there's more of this stuff happening, or people are paying less attention. And of those APP scams, about 4,700, half of them were covered by the CRM code, and then half of those covered by the CRM code were paid out. So I think firms are going to be, certainly complaints teams, and firms are going to be under huge, huge pressure here. So I'm thinking that, coming back to behaviour, that period of suspension, I think, is going to be a real hot point now for the industry. And I'm thinking, well, what should be people focusing on in those 2-3 days? What are they going to look at? You say behaviours. So what else do you think they should be looking at? It's like, right, okay, we've got to figure out this is a fraudulent transaction. I see stuff around guidance about intended purpose, legitimacy of the recipient. What kind of things do you think about?
It's about, I think it's similar to what we do now. It's about having a conversation with that person, and understanding what they're doing and why they're doing it. There's going to be, there are some of the more sort of the bigger banks that have these, the specialized team, and they're working with psychologists to understand, what language, what questions they need to ask, and how they need to ask them. Because a lot of the times, these people would have been groomed. They would have been told, these are the questions that you're going to be asked. These are the answers that you need to give to get the response that they want, and they're going to feel comfortable to go, okay, I don't think it is a scam. So again, fraudsters and these criminals, they understand. If we go out and say, this is what we're going to do, they're going to go, okay, well, I understand that now, so I'm going to do something different so I can subvert that. Yeah. So we need to keep coming back to the word sort of dynamic. It needs to change. It needs to evolve. You need to have these kind of open conversations and dig in a little bit and understand and ask pertinent questions to get the responses that you want, to understand why somebody is transferring money. They could have really, really elaborate stories, and you hear these the stories. There was a US journalist who put something like $50,000 in a shoebox, and then a car pulled up outside, and she handed the shoebox over full of money because she thought she was on the phone to the CIA, and the massive elaborate stories, and you believe them. So if you're being spoken to by somebody at your bank, then you're gonna be fully invested. If you're willing to give that amount of money away, then you're gonna be fully invested in the story. You're gonna believe it. So we need to kind of be clever about how we kind of pick apart those stories and try and break the spell. I think it's great. It's not going to work in every scenario. It won't. And again, it comes down to time. Do you have enough time to be able to have these long conversations to understand why people are doing this? Bringing in their friends and family as well. Having those conversations. But then you get the data privacy aspect. Can I speak to someone else about you sending your money? It's complicated. It's not easy. There is no single bullet. Which is why having different areas of responsibility, the social media companies, the telcos, that stop it before it gets to that point. But when it does, what can we do then from a bank and financial institution perspective, but also from a prevention and analytics perspective? How can we take the emotion out of it? There is no emotion with machine learning and AI and those kinds of approaches. It's purely based on the data. So the best data we have available, we have all the data we need, the right labels, everything else from there. We can make a non-emotional decision from there, which I would say, look, as a bank, I don't feel comfortable doing this. You've given me this story, I still don't believe it. I'm not going to transfer this money. And then again, I guess it gets to people like you guys. my bank, I pay my bank, I pay a fee for them to manage my money, and give them an instruction, and they haven't fulfilled that. Where do I stand from a legal perspective?
Yeah, it's going to be interesting. I mean, we're seeing that data from False saying there's 500 fraud kind of complaints a week they're taking on. So, right, we're coming up to the end. I want to get a couple of questions in, but I've got one last question for you, Steve. Kind of known unknown risks. If you're looking down kind of that horizon scanning, is there any one kind of risk coming up over the horizon which firms, wider society should be aware of on fraud that you're seeing?
I guess, I mean, it's one of the things we get asked every single year. It's like, what's next in fraud? We know what's going to be the big fraud in 2025. It's like we don't know. If I said it's going to be this, then the fraudsters are going to go, well, I'll do something else then. Every time we tell the industry and consumers, and we educate them, we're also educating the criminals, the fraudsters, the scammers. We're telling them what we're doing, which helps them. In terms of kind of direction of travel, scams isn't going to be going away. With the PSR and things like that, which it's going to have a lot more focus. That's going to still be the big focus. But we see that kind of migrating, potentially to card scams. Away from kind of doing a bank-to-bank payment. Is it going to be using your card? Are we going to see credit cards being used for muling? There's different directions it can do, and again, that kind of keeps coming back to that being dynamic and being able to kind of change direction and being able to adapt. It gets why we see such great results with our adaptive behavioral analytics, because they adapt over time, they learn, they change. We can't just say, right, these are which is why machine learning is better than rules, because rules are very static, whereas this changes, this evolves as human behavior evolves. We saw that with COVID. Everyone went from card present payments to card not present payments. A rule would have seen that and go, right, they've changed, from this to this. That's suspicious, right, I'm going to decline it. Whereas our machine learning saw that and went, well, actually everybody's doing that. It's a societal behavior that's changing. So we'll stop it when we think it's necessary. But just because it may look from an outside perspective to be suspicious, from history, looking at going from here to here, actually everyone's doing it, and it needs to change. And it's the same with the regulations as well. They need to change and adapt to new technology, to new behavior patterns for humans, and how we transact, and how we move our money, how we shop, all of those different things. So it just needs to flow. It just needs to change.
Yeah, I've definitely seen, again, the false data. They're saying there are more investment fraud cases, complaints coming through of people making payments via debit and credit cards. So that seems to be it. I've got a couple of questions here in the chat. We'll try and nail them off in 2 or 3 minutes, and then I'll round up. Have we got any good real life examples of how to successfully educate customers so that they are prepared to put up with a bit of friction in return for knowing that their data, I guess their money, is protected? I'm finding the only, from my side, I guess, I think we talked about it with Dr. Liz Carter, is that different people learn in different ways. So having, audible video messaging rather than just written messaging, and maybe different phraseology for different age categories of customer could have a better chance of building in that friction. Don't know what your thoughts are.
Yeah, again, it's you can't just have a blanket approach. Different people, again, we're going back to the beginning, we talk about TikTok and kind of short form stories and music and things like that. People ingest data differently. People still read the newspaper. I still hear, you still hear radio ads in the car and things like that. It needs to be as broad as possible, and needs to adapt as well to different people's different terminology. However old you are, how you relate to it, it needs to be relatable. Because then the worst thing is you get to a point where now when you're online, you go to a new website, you get the cookie pop up. Do you really read it, or do you just click yes or no? It's one of those things. It needs to be something that triggers to you. It can't just be a blind to it. If you see it all the time or hear it all the time, then you just start to switch it out.
Yeah.
And again, if you hear the same stories, if you hear the same, investment scam is only targets men between the ages of 26 and 35, who earn over X amount of money. Okay, I'm a woman who earns far more than that, so it's never going to affect me. Or this is the approach that criminals or scammers take. Actually, they adapt over time. They change their approach because people learn and they learn, and we educate. We say this is what they do, and so but the scammers go, okay, I'm not going to do that anymore. It's not black and white. You can't just say if they do this, this, and this, then it's a fraud. Okay, well they've done this, and then something else. That means it's not fraud. It needs to be relatable and kind of dynamic.
Okay, and then I've got one question I'll answer. Someone's asked from an Australian point of view about any firms using fraud prevention as marketing. I know TSB did quite a lot about that, about the guaranteed fraud refund. So TSB Bank was the answer for that one. Last question, and we can do it in a minute. The decentralized nature of the internet makes it challenging for law enforcement agencies to coordinate efforts and combat online fraud. Any idea how to centralize the internet? And I'm going to say, I haven't got a clue. It's a great question. I kind of feel I wish I knew the answer. You're a great man than me, Steve. Any ideas?
I don't think you can centralize it. I think there are different approaches you can take. Again, something we've done and we kind of entered into competitions with and done really well with is sort of privacy enhancing technology. How to share the right data in the right way, securely. Data is integral to this. If your data gets compromised, then it puts you at a lot of risk. It's about being able to share data between institutions or sharing the intelligence around data. So you're not necessarily sharing all my details. You're sharing the idea of me with another institution to say whether this person's good or bad, or a score associated, or how to transmit and how to share information in that secure way, in that private way that gives me as a consumer trust that it's been used in the right way, but also allows law enforcement, allows banks, other involved parties the ability to make better decisions using that without having to know the individual. You don't need to share my email address or phone number or date of birth, all that kind of stuff. But it's about sharing the right data in the right way to the right people to allow them to make better decisions. And going back to what we were saying around that kind of the burnout, the better decisions that we can make or we can automate through technology and providers such as us makes the better experience for those fraud analysts on the Coalface. So I've used the name of the thing now. And it makes a better experience for them, so they can take longer on those cases. They can make better decisions. They don't have that burnout where they're just looking at a queue of thousands of orders or alerts or whatever, and they have to make a decision. They have a fewer amount, so they can make a better quality decision for everyone. I mean, it's automate where we can, and we're coming up to time as well.
Yeah, that's great. Well, Steve, thank you very much for making time, and everybody who's attended and stuck around till the end, thank you for making time. Our next session at the Coalface will be on the 14th of October at midday. I've got Claire Myway, who's going to be here with us to talk about all things from coping with developing a career in this area, fin crime and financial services. We're going to talk about the joys of social media, networking. We're going to talk a little bit about insider fraud. So it's a few subjects to get through with Claire. Hopefully you can join us then, and we'll send you a flick book and a copy of the recording after the session. And thank you everyone who's taken the time to be here. Steve, thanks again.
Thank you very much.